Hello and welcome to The Trade. Let's, before we get into the charts, check what's happening at macro level. President Trump is saying the US is ready to proceed with further attacks on Iran if it did not agree to a peace deal, but suggested he was willing to wait a few days to get the right answers. President Trump saying the situation was right on the borderline and could escalate quickly. Meanwhile, Iran's newly created Persian Gulf Strait Authority has said there will be a controlled maritime zone in the Strait of Hormuz, saying transit through the area to pass through the strait would require coordination and authorization from the authority. This is Chinese tankers cleared the strait yesterday, as well as a Korean tanker. In the US, minutes from the Fed's April policy meeting showed a majority of members warned the Fed will likely need to consider raising interest rates if inflation continues to run persistently above their 2% target, with many members calling for it to drop its easing bias. US Treasury yields fell, along with oil prices on hopes of a deal to end the war. The US 2-year yield falling to 4.04%, the 10-year at 4.57%. Australian 3-year government bond yield futures there rose to 4.64%, the 10-year at 5.02%. The US dollar index was down around 1/3% on the session, with the Aussie climbing back to 71.5 US cents. We're taking a look at the charts. Joining us now is Zoran Kresovic from Blueberry Markets. Zoran, welcome back to you. Let's get across what we're seeing in currencies at the moment, particularly with the Aussie greenback cross. What are you seeing there? Because a lot of this is obviously dependent on where monetary policy goes from here.
Yeah, absolutely. And there's a lot of talk about the monetary policy tightening, not only domestically within Australia, Andrew, but also globally. And we know, and we've seen quite different headwinds actually over the past few months, where we've seen the Fed was actually, the narrative was all about not raising the rates and basically keeping the US rates unchanged, and in fact actually dropping the rates. But that's obviously changed. The market is repricing that. We're seeing that on the short and long term bond yields as well in US and here in Australia as well, because the market in US is pricing around 50% chance there will be an interest rate hike at some point happening throughout this year. And we've seen US dollar continue and gain some momentum over the past few sessions, despite the fact that obviously overnight US has actually weakened somewhat and Aussie dollar gained a bit of momentum. We're still seeing a fair bit of weakness in the risk currencies, including Aussie, which was actually performing exceptionally well a couple of months ago, but we can see that throughout the mid-March till now, we're around the same break-even point. So Aussie is actually trying to gain a bit of momentum here. Fibonacci level of 23.6% to around 50% of the upward range is still holding quite well, which is obviously a good point to see. However, we have broken below that 20 and 50-day simple moving average. So as long as we can actually maintain some contingency and consolidation around these levels, Andrew, then hopefully we'll be able to get a bit of momentum and buyers coming back into the market and essentially taking Aussie slightly higher towards that 72.50. Now, just in saying that, though, we are back within the range that we've actually seen since around, early 2026. So 69 till 71 is actually our range that's been consolidating. And for Aussie, it's been a comfortable spot of resistance for a long period of time. So we do understand that obviously we've got the employment data coming out today. And I don't expect too much, to be honest. In fact, actually, unemployment and employment stay around these levels. The economy is still running fairly hot, and perhaps maybe Aussie can get some momentum to actually push higher and save those that are actually going overseas for travel purposes and holidays.
All right, well, at least there's a positive there. So, Zoran, that's what we're seeing in currencies. Let's move now to the critical oil markets. And in fact, we saw, I'll take a look at Brent. It was down 6% overnight. Once again, all based on rhetoric we're hearing from President Trump saying he's very close to a deal out of the Middle East. We have heard that before, of course. You're going to take a look at, though, at WTI. What are you seeing?
Yeah, so I think you raised a great point there, Andrew. Market is probably front running a little bit and reducing the risk premium on the crude oil, right? And that's why we've seen such a large drop overnight of around 6%, and sellers fully controlling the current market stance. Now, in saying that, we have actually seen in the past where these things have actually changed quite quickly and escalated quite quickly as well. And in fact, actually, US President Trump did mention that if the Iran doesn't come to the table, then it could very quickly escalate, and they could essentially start hitting some critical points or critical oil refineries in Iran. Obviously, they would incline that U.S. crude oil would actually jump up on that premium risk. However, right now it's still holding within that range of around $100. I think the first point of support that I find on this chart is around $80, Andrew. So if we do see the escalation of the Middle East tensions, we have actually seen two ships overnight go through the Strait of Hormuz and perhaps traveling towards the Asia. So perhaps there is a bit of a positive news there. However, overall, in the past, when things were back to normal, we have actually seen around 130 ships per day going through Strait of Hormuz. So we can see a vast difference. The other point is as well from the U.S. inventories. Overnight, we have actually seen that the levels of crude oil inventories have actually dropped to the lowest levels in around a year. However, net exports from the U.S. have actually gone up for the first time positive ever, which obviously indicates that Europe, Asia, a lot of African countries are actually turning towards the US now. And US is the real winner at the moment because they are doing exceptional amount of exporting crude oil towards the rest of the globe. And that's probably a point of difference right now. So I think at the moment, market is actually starting to price that de-escalation. However, if we don't see that happening, then I would expect crude oil to go around the $110. If it does charge through that, then there's no reason for it not to retest the 120. But I think within the range at the moment, first level of support on any positive news is $80. And then we can see that gap that's been created back around March, which is around $65, and I would expect that you would actually get here at some point in time in the near future.
All right, key levels to watch for oil. Finally, Zoran, let's turn to what we're seeing with precious metals with a focus on gold, and it has struggled, hasn't it, since the outbreak of the conflict?
Yeah, I think the narrative has changed, Andrew. We know that in the past, obviously, gold has been considered as a major hedge against, any further escalation or potential, risk of troubles across the globe. But that hasn't been the case anymore. It's more so following through what I would say probably equities are doing at the moment. So, we can see that U.S. Treasuries in, 2, 10, 30 years in the U.S. and globally are actually rising. We can see the US dollar is gaining momentum as well. And contrary to that, actually, gold is actually losing momentum at the moment. And we have seen a bit of gain overnight, but that long-term downtrend line that I've been actually kind of hovering and talking about it for a long period of time since around 2025 Feb, when it did reach 5,608, is still fully in play. Whilst it did break above that level last week, it couldn't consolidate and hold, and buyers could not actually be convinced to load and go long on their positions. And as a result, we've actually seen full control of dovish stance on it, and sellers actually taking a lower. So I think if we're actually talking about the key levels at the moment, I'd be looking at probably gold around that 4,000 level. I think that's an absolute must as a level of support. Any break below that, we could be seeing gold go towards that 3,200 to 3,400. I think a lot will depend on the Fed. We do understand that on June 16, 17, it will be our first, Fed meeting with the new Fed chair, Walsh. Trump did indicate that obviously he does not want to interfere in terms of the monetary policy and in terms of the interest rates. But markets are pricing that potential interest rate high coming in the US, especially given the fact that obviously US inflation is actually running pretty hot above that 2% target range. And any further rate hikes would obviously put a dent in gold and silver to actually drop back a little bit lower.
Zoran, great to get over those key charts. Thanks for joining us on Blueberry Markets.